The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour. Oh boy, what a day makes, doesn't it? We certainly have a little bit of turnaround, up 22 points on the S&P cash, and 2.4 billion shares, and we've got volatility, and I'm not just talking about in River City. We're talking about just about everything. So, of course, the almost Pavlovian response to any dip is to buy it, and you've been rewarded so many times. There will be the time that people don't, and it's been my experience and the experience of history that bull markets basically reward people all the way to the top, and they have a bad habit of giving all that cash back on the way back down. I hear Tom O'Brien say many times, just put in a stop. Just put in a stop, whatever it's going to be. If it's half the price of your stock, put in a stop now. And at least you'll get, if you made 1,000%, at least you're going to make 500%. But put a stop in, which is pretty good, a pretty good way to think about it. You've got to be knowing that eventually the music stops and everybody gets off. And it's been my experience, no matter what you say and what anybody else has said on TFNN or any channel about selling, the vast preponderance of people that get conditioned, just like Pavlov's dog, can't ever get off the Ferris wheel. It just looks like it's going to do nothing but ever go up. And, of course, they give it all back. And bears make money and bulls make money and pigs get slaughtered. And there's people like we talked about yesterday that are perpetually bearish. And old Joe Granville gave back 98% of a monster win. And same thing with people that are long, and that is that they never sell. And, of course, they end up giving it back and more, and most of them end up selling at the bottom. Pretty good indication of a bottom is one of those folks just can't stand it anymore, and they finally throw in the towel. And it makes a good buying for the rest of us that will buy and sell at a whim, much less with any actual need to do it. But I digress. I haven't digressed this year. It's my first digress of the new year. So we'll put this one in the can and send it to the Museum of Broadcasting. As, of course, as you well know, I've won yet again a Golden Digressors Award. And we'll put that on the mantle with the rest of them. What else is going on out here? Just wanted to see if there's anything else. 2.41 billion shares. Pretty much what we're looking for. We're seeing a lot of people pile back in the usual names. They can't wait 5 seconds to buy the dip. And you get IBB up 3% today. And it's going to be volatile until all these things probably pull back. But we'll keep an eye on them. I promised yesterday before the end of the show to talk about how to trade the VIX, and we will talk about that certainly today. We got to get through some news out here. I've got a lot of questions. I'm going to try to answer some of those today on at least the first half of the show, maybe a little bit later before we get into some charts. You can always give me a call at 877-927-6648, or you can email me at path@tfnn.com. That's path@tfnn.com. And, of course, 877-927-6648. Now, if I can find my email, I forgot to, it's not responding. It should respond, shouldn't it? And course, I've got the Nigerians right now telling me that, of course, if I'll just give them $10,000 in my bank account number, they'll gladly put millions and millions of it in there. So I apparently am independently wealthy from the Nigerians today, once again. But what else do we have? Well, let's get into it out here. And that's always because there's nothing new on Wall Street. History is always repeating.
That it's all just a little bit of history repeating.
On this day in 1825, the nation's first non-financial IPO sold, IB, not a bank, as the Delaware and Hudson Canal Company goes public at $100 a share. Company hits 112 that May, slides back to 71, but over the next 3 years goes on to become one of the stocks for the next 30 years, almost going up 10% a year. Pretty good investment, especially through some fairly turbulent times before the Great War between the states. But on this day, the first non-financial IPO is sold, and I think that was actually in the world. A lot of banks went IPO'd, but not many actual companies. They were almost always privately held. But I do digress. I had a question also about which book I'm reading, and I will hold it up here to the camera, and it's Harriman versus Hill by Larry Haig, Haeg. You can get it on Amazon. But that's the book I'm reading right now. I actually pretty much read good books twice. The first time I read them, and second time I go through and make notes on them if they're worth doing that, and I'm doing that right now. But an excellent read, especially if you're interested in market history. And I'll probably give that book away here on the air when I get done with it. Had a few other questions. One was, am I actually considering buying land in Cuba? I think that goes back to a conversation last month I had with Tom O'Brien on the Tech Insider Hour, and that basically the loosening of restrictions with Cuba. And the answer to me right now is, as long as Castro's there, I couldn't do it. Most people don't know history at all, or they choose to willingly ignore it. But most people don't know on November 17th, 1962, the FBI basically snabbed 5 spies. They had all the blasting caps. They were going to go out and steal a bunch of TNT right before Thanksgiving. The plan was, and these were all guys sent up here from Cuba. The plan was to put about 500 kilos, or about 200 and some odd pounds, of TNT in Gimbel's, Basie's, Bloomingdale's, Grand Central Station. There would have been about 300,000 people in those combined locations on Thanksgiving, the day after Thanksgiving at noon, which is when they were supposed to set off all the charges. Would have probably made 9/11 look a little weak out here. That's just one of the wonderful things that old Mr. Castro's done. So when people ask why we aren't friends with him and how we could ignore him all these years, I could go through a laundry list, but how about this? Per capita, he killed more of his own people, including Jews, than Hitler. He's killed at least 10,000, if not more, people that are gay and lesbians. He just took them out into a place and shot them, and continues to, by the way. Don't hear a lot about that. There's just kind of a willing disbelief to think of the guy as anything other than horrible, as many years, in just the last few years, he's done some pretty horrible things, combining with the likes of the Palestinians to kill children, shipping illegal weapons to the North Koreans, and helping out as a third-party arbitrator to help the Iranians gather nuclear weapons. So in my book, I would have whacked him already if I was president, and then had nice relations with him. But he's not a nice guy, and I'm pretty sure that he'll steal any land if him or his brother or any of their siblings still have anything to do with it. So I can't really, until those guys are gone and buried, and hopefully in the seventh level of hell of Dante's Inferno. Kind of hard for me to hard for me to know about buying anything. I love to. I know the Cuban people are wonderful, and just goes to show you can't let something as evil as communists in your country can't even let their nose under the door, as we've said before. 6,000 years of recorded history shows what a failure communism always is. Had somebody also say something about how Apple ripped off Microsoft for Windows. I just wanted to remind everybody, I think I brought this up several times in the last couple of years, but I heard it again, and every time I hear something that's patently false, I want to bring it back up. On December 9th, 1968, Douglas Engelbart and a group of 17 researchers showed basically everything that we use today, that the Mac and Apple people more than credit themselves with actually doing it. There is existing video at the link down here on the bottom of my page. Microsoft, if they ripped off Apple, Apple ripped off, of course, Xerox, who was actually working on this stuff, and where Steve Jobs actually went and saw it for the first time. So there's very few new things out there in the world, and probably at least the first recorded incidents of anybody talking about things like cut and pasting and word processing and all the things we do today came on December 9th in 1968. If you want this link, you can email me, and there's lots of videos where this guy is showing it, and you can pretty much tell it's 1968. The video is owned by Stanford Research, so you know it's not some kind of flaky thing out there. But as Steve Jobs said, great artists borrow fantastic, or good artists borrow, fantastic artists steal. And he was more than willing to repeat the lie that Windows and Microsoft ripped them off. I don't know if you can rip off somebody that's ripped something off. Can you steal from somebody that's stolen something? Is it really stealing? I don't know. It's like stealing from a drug dealer. Does anybody really care? But I digress. Give Apple credit for both the smartphone and the original GUI interfaces for being first to the market with it. But neither of them did they actually have anything to do with inventing. Almost everybody everybody samples music these days from other people. There's very little new under the sun, dear Horatio. So I just wanted to bring that up. But if you want any of these links, you can always email me. And Tom yesterday asked me about how to buy the VIX, and we'll get into that here in a little bit, which I think we should be coming up. But I don't hear any music yet. There we go. Got to get that music up, Mr. Engineer. It's a couple of days in a row here. I'm going to get on it for you. I can just barely hear it. I mean, at the lowest level. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Think or Swim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
We found out that the president is vowing to veto the Keystone Pipeline, and for that, I am going to call him a Luddite. Those were people that hated progress. Kind of the same people that threw their shoes into the machinery, and from the word saboteur, because, of course, they were up there where they have wooden shoes, and they used to throw their sabots into the machines because, of course, a few people got canned when the machines came out and did a lot of work that used to be taken care of by a lot of people and met just a few people. Of course, that brought the price of candles down 1,000% or something ridiculous. I forget what it was. It used to be like 2 days to work to get a candle. And after they made machines to make candles, then it was like 1 hour a week is what it cost. And those people went and found other jobs. People always hate progress. But the worst thing about it is, again, when you find out that people basically are either stupid or out and out lie, went back into the records and found out that the safety record on pipelines, of which there's about 12 million miles of pipelines in the United States, at least for crude, 25 barrels per billion barrels miles. So just about infinitesimal. 99.99993% makes it to its destination without incident. One of the best safety records than anywhere else you can find. Most of these pipelines use land outside major cities, so even if they did blow up or do something bad, far away from humans, unlike trains, which come very close to most towns, and especially anytime we have a huge dump of chemicals that does a Bhopal on you, on your town. Most people hate it, but I think there's going to be a few ramifications. Of course, I posted in the Den yesterday, watch the pipeline companies. If he basically vetoes this, he'll probably veto most of the other stuff out there. But to my knowledge, I went through and looked and tried to find everything I could find on pipeline safety, and there's nothing out there that suggests that pipelines are anything other than the safest way to transport stuff, even safer than barges, even safer than trains. And the reason is that most of those pipelines, especially where they go over rivers or other ways that they can get into water and be spread over a long and bigger area, tend to have higher quality restrictions. And if it's going to leak or it's going to fail, it probably does it in a pasture somewhere out in the middle of nowhere. They come out, they clean it up, they dig all the dirt, they do the EPA stuff, and it's cleaned back up. Probably the biggest problem I see is the Canadians will start to look at us as opposition for finding a market for their energy, and maybe China does something smart and locks up all that energy for years to come, forcing us to pay higher prices. I don't understand it, but Luddites are real, and everybody hates, a lot of people hate anything that smells of progress or lower prices for a variety of reasons. This one may just be political in the fact that Buffett owns all the railroads, which is a big thing in Harriman versus Hill. Guess who owns all the railroads these guys fought over in 1901? Oh, Mr. Buffett. Everything comes around again. All the railroads that they busted up in that thing, all are owned by him once again. Funny how things don't ever change out there. Anyway, if you're interested in a history of people doing stupid stuff and a rational and optimistic outlook on life, check out rationaloptimist.com. Like I said, if you need any of these links, you can email me and I'll be glad to send them to you. A fantastic website for a gentleman showing you just how every time something happens and everybody complains about it, a few years later, the prices have dropped and everybody has a much, much better life than they had 10 or 15 years earlier. But people just can't see much farther past the end of their nose than that. But, you know, maybe we're seeing a little bit of support in the crude market today because of that. And I'm not thinking it's a very strong market. I'm just saying that we have found at least a little bit of sand under our keel. But what else can you say about it? We're up 62 cents, $48.54 in crude. That we give in a lot of this back doesn't bode well for crude. Kind of insane to think that it could even go lower. I think we were down to 46.50 or so in the morning. But we'll talk a little bit more about this and get into buying the VIX when we come back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
If you lose her, there'd be a hole in your soul. There'd be no grave deep enough to bury the pain. Ooh, if you lose her, you may not see it now, but
We are
when
back.
she's gone, you'll know.
You can call me at 877-927-6648. That's 877-927-6648. You can email me at path@tfnn.com. And, of course, you can post a message in the den. Anyway, we were talking yesterday, got an email with not enough time, and I wanted to think about the answer for a while from Tom. Tom didn't tell me where he's from, so I don't know where he's from. Maybe he's an alien. I mean, not south of the border alien, but from another planet or something. But you never know. He didn't tell me, so I'm going to have to guess. Anyway, the question is, I guess, where would the UVXY come back or the VIX come back? And that's a much harder question than it used to be. I brought it up in the fall, and that is that they've changed the way that the VIX has and is calculated. In fact, hang on just a second. Now that I think about it, because I think I've got it in my downloads. Original Dow. I know it's in here somewhere. Digital IC login action. Did I move it out? It can't be that. Could be this. Nope. Yeah, I'll try to find it next break. But there's a white paper from the CBOE, and that shows exactly how the VIX is calculated. Now, I had that white paper for many years, and they decided to change the way the VIX was calculated. It is a rolling average between two different time frames. It used to be, I think, 14 days and 45 days. And now it's like 24 days and 37 days. And that makes it act a great deal different than it did historically. So you have to kind of watch that back in. We bought the UV XY under 2150 back here. When was that? It's got to been, yeah, it's got to been the 30th. Anyway, we had about 2 or 3 hours to buy it under 2150, and I liked it. I was just buying it for the beginning of the new year, but my goal on it was $32. I thought that's probably 32, 33 bucks was in there. But yesterday I started seeing the S&Ps move without a corresponding move with the VIX itself. It looked to me like a lot of people were already getting ready to go to the other side of it. My target was holding out for yet another dollar. I thought we'd probably see that gap that extends about 32 to 35 come back into it. So basically looking at it, I think I put as it broke through 30, I said, well, it's time to start selling. And I think people sold all the way up to about 31 on that yesterday. We had both options. You could either take the options or the ETF itself. But probably the bigger thing out here that you want to look for is that the numbers are going to be a lot harder to hit because of that change. There's not a lot of historical perspective. I think it went in effect the 1st of October. And those changes are going to mean historically this is going to move differently than it has. So far, it hadn't been huge, but it has taken off the edge of the bottom and the top. I'd been trying and actually said that in the newsletter, if you could buy at 18 or 19, that's where I wanted to get in. Well, it never got in, and I started seeing the pressure starting to mount and knew that if I didn't hop on it right away, that it would be problematic. But to an extent, you probably want to use your charts, but just know that the up and downside now for trading the VIX and things like the exchange traded fund UVXY is going to be a lot different. And the highs are going to be a little less high, and the lows are probably going to be just a little bit lower, higher actually. So I'm going to say you probably want to trade about 5% in from the previous highs and lows that you think, and historically, that the S&P movement would have put into those already. So the question comes back, where would I buy the VIX when it comes back? These trades that I've done, and I tried to explain it maybe 6 months or 9 months ago, there's only one way to buy this without losing your head, and that is buy it at the bottoms. You've got to wait until, especially this, and when I bought it, this has been generally the pattern. Let me zoom in on it here a little bit. See how it just goes sideways 1, 2, 3, 4, 5 days, and it finally pops up where we bought it on the 30th. You want to find where it just goes sideways and it loses all the energy. At that point, you're probably just the random noise of standard markets and moves in markets means that you at least have a fighting chance on this. They move so quick and it moves so violently that it is a very tough very tough things to move. If I could say that better. Basically, it's a extremely hard index and ETF to trade because it's so easy to get your head taken off. You can only buy it when there's absolutely no interest. If you start trying to buy, enter, wait for a 50% pull back, everything else, the problem is there is so much noise that this thing will bust any kind of reasonable risk-reward scenario that you have out of it. So I pretty much wait for this thing to sit down and go sideways for a while, and then I buy it. So you can look at this or you can look at the VIX. Basically, they're going to be fairly close to the same. You also want to watch when there is divergence between what the market is doing and what the actual VIX and some of these ETF funds are doing. And you'll see what I was looking at yesterday, and that is as it broke through about 3050, we had about another 10 points of movement in the S&Ps, and it did nothing. And you could start seeing the volume pick up and everything else, and that pretty much told me I was right on at least a minor pullback. The problem is you're going to have $3 or $4 pullback on this thing, and the question is, that can basically evaporate right in front of you. So unless you get a good trend that discontinues and you don't see any kind of sign that the market's going to bounce, in this case we had the QQQs, we talked about that yesterday, that came in with very light volume to that previous low, and volume did come in a little bit more before the end of the day yesterday. But if you looked at the September 17th lows, $99.92 on the Qs, and then you saw the January 6th low yesterday, 66 million shares. It is lighter. You're probably going to get a bounce. It wasn't light enough to make me think that this thing's going back up to the top. But I think, as I said yesterday, you could see the Qs back in 102. Now, today is options expiration, the start of it, called Weird Wally Wednesday by some, because of Don Wallachuk actually bringing it up. Option market makers have known about it for a long time, and that is going delta neutral before expiration. Now, another thing is that 80% of all options expiration cycles, the Wednesday before the expiration week on the monthlies, have been historically back to the early 90s, when Black-Scholes was really starting to roll out and everybody was starting to use it. And there was some kind of at least framework for understanding how options have been bought and sold. And of course, if you don't know what the VIX is, it is a rolling indicator, as I've said before, but it is the out of the money. It is the premium on the out of the money puts and calls. So when you're looking at the VIX, remember that isn't at the money calls and puts. It's only ones that are worthless if the stock or if the index expired that second. And so you're really looking at a different kind of index, in which the stuff that's at the money and in the money really doesn't matter. It's only everything outside that's of the money at the moment. So you really have to understand what it is, what it does, and especially understand the differences, which I will try to find, because I just saw it. I was actually clicking on stuff, and I don't know why I can't find it. Historical volume, download data details. I had it in here somewhere. Maybe I put it in my other directory here. Let's take a look at it. No, did not. I'll try to find it during the break. Anyway, great paper, white paper from CBOE on how it's figured. I would recommend reading that highly, and also notice the difference in between the 45 and 14-day moving average between the two, and the way that they never get closer than 15 days. Again, the VIX is probably going to have a big move over the next 24 hours. And that'll be as these last 14 days roll out of expiration. Actually, you start to see it on Monday, but you'll also see some additional movement here today. And then you're going to get a much better feel for how the VIX is going to move, since you're not going to be rolling over the contracts anytime soon. And you're going to at least be 14 days out all the time before expiration on any of those options, which is the last part of it. So it's not like the VIX is figured by options out of the money that expire tomorrow. And they don't use the weeklies for calculating them if they're still not a week or two away. So just some food for thought out there. Thanks, Mr. Basil. Hopefully he's not fighting that squirrel in his front yard anymore. But I do digress. Oh, let's get to some of the other stuff that's moving out here and take a quick look at it. Hopefully that helped you. If you have more questions, of course, you can always call me at 877-927-6648. But probably at least a few hints at looking at trading the VIX. Only play it when it's dead and not doing anything. And don't try to play the opposite side on the top. It's just so easy to lose all your money on it. I've only found one way using game theory to come up with a way to tame the VIX, and that is play it when it's dead and play other things when it's active. So Campbell Soup out here moving today. Let's take a quick look at why. I'm trying to remember why. I have it in my list of stuff out here. See if we can find it. Come on. It's down here somewhere. China, Canada. Why is that so? Maybe I was down too far already. On the wires. Well, something's broke here. Okay. Reports out of the 3G Capital looking at exact acquisition target. Campbell's one of the names they may consider. So 3G Capital. Maybe a takeover target out here. Nice bounce, decent volume out here today for Campbell's. You could also make a claim that's a safety trade. Another one out here being rumored around is Dick's Sporting Goods. It went to almost $56 today. Monstrous volume out here. My guess is there were a lot of people short this thing and they jumped and ran them on, again, probably phony news. Can we say that? I think they probably took some people to the cleaners on this one. This thing gapped down on heavy volume on the 20th of May. 15.7 million shares popped up today on 7 million shares. But my guess is there were a lot of people that maybe had been short it yesterday, and they took the day to clean these guys out with yet another phony rumor. But just my opinion at the moment. GMCR, nice little pop out here today. To announce that it will be developing a selection of Dr. Pepper Snapple Group's brands for the forthcoming Keurig cold at-home beverage system. I wonder if that's going to do any better than soda. In fact, let's take a quick look at soda out here today. No movement on that thing. No volume either, but certainly light volume and lows. You would think if someone's going to buy this thing out, this one looks a lot better. You would also think that if you wanted to short this, you need to wait for this thing to be back up at about $26, but tough. HP, none of these companies involved in, of course, drilling and energy production can catch a break. This thing's down on heavy volume. It's broken the previous low of December 16th. $59.24, 2.6 million shares. Already have 3.7 million shares. May not close below that, but certainly looks very interesting. You've got high volume here, which means that at least you're going to come back and retest that low, and it will be problematic. Let's see if I have anything more on that. Price target lowered to $70 at Howard Wheel. I don't even know Howard. Maybe he was in my gym class. Anyway, we will be back in a minute.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
That's right. We got a double shot of Tom O'Brien after this show. And I guess it's Wednesday, so we've got even more after that. So pretty good. Now, I was probably going to talk to Tom about it, but it's kind of tough to figure out a few of these companies. But the ones that are seeing some real action out here today are in this loan reinsurance companies. And these things, a lot of action out here. And apparently the president's talking about redoing the way that these mortgages are refinanced, and maybe good for home builders. But certainly these companies that are in the finance insurance business, taking it on the 10MTG, which is Magic Investment Corporation, which is one that I actually shorted when everything started blowing up in the housing downdraft in 2008 or 2007. This is the one I hopped on, and boy, did it crater on that. But we've got a few more of these companies in the same sector. So you may want to take a look at that and the way Fannie Mae and Freddie Mac are moving over the next couple of days, because it has been rather interesting. But that was one. What's the other one out here? ESTN is another one in that sector. Essence Group, a huge move on this thing, down on that. RDN is the other one. Is that it? Okay. and Essence Group. But boy, this blew down with huge volume. I don't know how likely it is they're actually going to get any of this stuff through Congress, if it has to go through Congress or not. Maybe Tom will talk about it in his show. And RDN, which is the Radian Group, another one that blew through and just monstrous volume today. So none of these companies liking the discussion of how these mortgages are going to be refinanced. Just from reading it, it almost sounded like 2005 again, where everybody should be owning a home. And it just seemed like a little bit of the hair of the dog that bit us. Maybe this is a little bit nuts. I haven't had enough time to research it, but maybe Tom will talk about it during his show if he's listening on the pre-show here as he warms up in the bullpen. Anyway, a couple of them that we're interested in. Of course, we've got earnings and really go into full gear out here on Monday. But in the meantime, RPM, another one of the big, huge movers out here. This thing just cratered on monstrous volume, 3.5 million shares already. And when we look at it, missed Q3 consensus estimates by 3 cents, missed on revenues, fiscal year 15 and fiscal year 16. I don't think this is going to be a one-off thing. I think when we start going into next week, especially with the dollar blowing through 92 today, the dollar index, that be, did it stay up? No, but it went through it. Pretty interesting up here. Got to 92.26 for a high, still up 42 cents on the day. But it certainly looks to me like the dollar index still has some legs under it. I don't know how much farther this thing's going to go, but even if it just stays right here, or if it even pulls back a little, a lot of these companies got to start showing, especially if they're multinationals, got to start showing that in. I just can't imagine that anybody could have been hedged that far and that well to absorb all the dollar euro movement, or the dollar Aussie movement, or if you're a multinational, maybe even Asia dollar movement. You get huge moves, always causes problems. And even if you're Fortune 500 company, I don't think somebody from the government came and said, hey, we're moving the dollar index 12 points in whatever, how many weeks. Don't think that happened. Boy, from a rocket from 80 to 92, that's got to cause some displacement. I think we're going to start seeing it next week. See you tomorrow, same bat channel, same bat time. Remember to sell or cover when you have to, or when you can, not when you have to. See you tomorrow.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.